Tesla and BYD have different revenue compositions but operate in the same industry of manufacturing and selling alternative energy vehicles, and I want to find out which one of them is a better investment opportunity. I use the HOLT evaluation methodology to arrive at my investment thesis, and it's important to note that HOLT allows cross-border company comparison, meaning the investment thesis is equally relevant for an American, Chinese, and any other investor in the world. Most fundamentals say Tesla should have destroyed shareholder value because it continued to reinvest into negative spread business, yet the stock price grew significantly over time. To further prove the point, historically there has been substantial divergence between market price and warranted price. Overall, the market is optimistic about the company and prices in a significant CFROI growth by 2021. However, the probability of achieving the level of 18.8% by 2021 is just 2%. Tesla is in the early stage of HOLT's average life cycle. Not surprisingly, the company is priced for strong asset growth, which is currently the primary catalyst for driving shareholder value. However, as the company matures, an improving CFROI profile will start to make the bigger difference. To take that into account, I use the historical normalized rate of asset growth and assume the CFROI levels to grow to 5% by 2021. Asset growth reflects the fade effect, yet the CFROI is to turn positive, a good balance for a maturing company in an industry that's attracting serious competition and which business model is yet to be proven. As a result, the warranted downside for Tesla is 18%. BYD has recently shown CFROI levels below their discount rate, which were attributable to a few unsuccessful acquisitions of prior years, yet there has been a steady increasing trend. Shareholder value reasonably follow. BYD is a more mature company when compared to Tesla, evidenced by lower asset growth rates, yet more sustainable CFROI level, which is the primary catalyst in the valuation. I use the institutional broker's estimate system, which adequately projects the CFROI level at 7% and asset growth fading to 8% in 5 years, a reasonably conservative scenario for a 13% upside. Finally, it's important to acknowledge the scorecard metrics, as Tesla is ranked the worst in class, being risky and expensive, and BYD is neutral in style. Both metrics consistent with my investment rationale. According to the CFROI framework, the strategy to increase shareholder value for Tesla is to increase the CFROI levels above their discount rate and to continue to reinvest into business at positive spreads. For BYD, the strategy is the same. In conclusion, I see BYD is more capable of making the strategy happen and realizing the upside potential. Based on my investment thesis, I choose BYD with 13% upside over Tesla with 18% downside.